Guys, yesterday on 17th of June, I told you that we are expecting this kind of candle where the movement of the market will be very, very limited. Secondly, I told you that market is not able to breach this level, and once the market hits this level, then there will be a rebound in the market. And in the entire session, market is expected to trade like up, down, up, down, up, down, but no heavy movement. I told you that there will be no heavy movement. This was the yesterday's midweek update. Guys, as you have seen that whatever I have predicted yesterday, market has moved accordingly. Okay, and there was a doji kind of candle. The movement of the market was very, very limited. The only thing that market failed to show was that I was expecting a closing around 3700, means in the zone of 3710, 3700. So what happened is that market was trading around 3695 or 3693 or 3697, but in the last 1 hour something has happened and the market came down. Okay, and it formed a doji kind of candle. Anyways, other than this, okay, everything went well, everything as was expected. This means that the accuracy of yesterday's midweek update was more than 92 or 93%. Okay, 92 to 93%. Now, if we look into the midweek update on June 15th, okay, this was the June 15th midweek update, and June 15th was the day when the Feds announced a 75 BPS rate hike, 75 BPS. And this was the midweek update on June 15th, where I told you that how the market is going to behave. Now, as you have seen that on June 15th, okay, first of all, as I predicted that first the market will move up, okay, and then market will remain in the bullish zone, okay, until and unless there is an update from the Feds. And when the Feds release the news, the market will tank, and then after the couple of minutes, okay, the market will again retrace, and the market will come down only and only if the Fed says that they are going to raise the rates aggressively, okay, every month or every quarter. And if there is no more bad news, then there will be a short-term rebound in the market, else the market will tank. Now the market came down heavily on June 16th, and why it happened? The reason, okay, I gave you yesterday that it happened because the Bank of England and the Swiss Bank has raised the interest rates. Okay, Bank of England has raised the interest rates fourth or fifth time, okay, in a row, but it was the Swiss Bank has raised the interest rates after 2007, means after 15 years. And because of this, okay, there was a fear in the market, and you can clearly see, okay, very heavy bearish candle on 16th of June. This is what I told you on 15th of June, that if there comes a bad news, okay, particularly from the Feds or from some other central banks, in that case the market will collapse or the market will come down heavily. Now, other than that comes the June 14th. In the midweek update of June 14th, I told you that because the market came down heavily, very, very heavily, market has collapsed, okay, in last 3 days. This means that on June 14th the market will further come down, but because we have a very strong support at 3710, so the zone of 3710 will provide a very strong support for the market, and whenever the market hits 3710, there will be a rebound in the market. And this is what has happened exactly. So the market came down to the zone of 3710, that was 3706, almost 3706. And then after hitting the 3706, there was a rebound in the market, and then after the rebound the market was range bound for the entire day. Now, in my previous weekly technical analysis for the week of June 13th, I told you that because in the previous week, okay, the market has came down heavily. This means that on Monday, on June 13th, the market will come down. The market will come down. Okay, we have a very strong support at 3840. This is what I told you, that 3840 is the very strong support, and if somehow the market is able to survive at 3840, then only it will hold, else the market will come down. But because the open of the market was less than 3840, thus the open was the high, and the market immediately it collapsed, it came down. So overall the accuracy through the midweek updates, okay, it was around 93% to 94% for the previous week. Anyways, guys, let's see what is going to happen in the week of June 21st, how the market is exactly going to behave. Okay, what will be the support and resistance levels. So let's do the technical analysis for the week of June 21st for the SP 500 index. As usual, I will do this technical analysis in two parts. First, I will do it on the weekly chart, and then I will do it on the daily chart. And this way, we will be able to get the most accurate movement of the market as we are getting for last many months. So I'm going to begin with the weekly chart first. So as I've told you yesterday in the midweek update on June 17th, that on June 16th, because the market came down heavily and the market hit the 200 week moving average. 200 week moving average means EMA, not WMA or SMA, it is the EMA, 200 week moving average. So on June 16th, the market hit the 200 week moving average, and that was the reason why the market was able to survive and market failed to hit the 3630, but it came down to the zone of 3630, which is so this is something that I'm telling you for last many weeks, that whenever the market comes down, okay, we have a very strong support at 3630. Okay, so or the zone of 3630. So when the market came down, it hit the 200 week EMA, and finally it found a very strong support. Now yesterday again I told you that market may come down again and market may retest. Okay, see, this is how the market works. So when you observe the market on the daily basis for many months, okay, years, then you will notice that this is how the market works. So yesterday I told you that market may come down. Okay, there are very heavy chances that the market may come down, and then the market will retest. It will retest, and and the market is not expected to breach the 3638, 3639, okay, or the zone of 3630 at any cost. So there are less than 1% chances that the market will be able to breach, but otherwise more than 95 or 99% chances are that when the market retests the 3630, sorry, when the market retests the 200 week moving average, market will see a rebound, and rebound towards what? And the rebound will be towards the 3710, which is now going to act as the resistance, and this is how it works. Now why I'm telling you okay this again, the reason is that the same thing is expected to happen in the coming week. So before I deduce the probable movement of the market, okay, let me do the technical analysis. So in the technical analysis, okay, first comes the Bollinger Bands. If you see, this is the lower band of the Bollinger Band, this is the median of the Bollinger Band. This means, and the market has closed below the lower band and below the median of the Bollinger Band. This means that the market is absolute bearish. Then comes the moving averages. If you see that these are the moving averages and there is a clear fan out in the moving averages. Okay. Secondly, the market has closed below all of these, the moving averages on the weekly chart. Remember, we are talking about the weekly chart. So this means that the market is absolute bearish through the moving averages. Then comes the Ichimoku cloud. If you see that the market is trading below the Ichimoku cloud, and this is what we are seeing after 2 years, okay, after March 2020. So because the market is trading below the Ichimoku cloud, this means that the market is bearish through the Ichimoku cloud. Then comes the MACD. MACD is the moving average convergence divergence. As of now, MACD is less than the signal, okay, but there is not much divergence. This means that yes, market still has a lot of potential to come down, okay, because the divergence of the MACD is still in control. But it is clearly seen that through MACD market is bearish. Then comes the stock RSI. Okay, stock RSI. Then this is in my previous weekly technical analysis, I told you that as of now both K and D are in a pattern where it is showing that the market is bullish, but in the next week, means in the week of June 13th, this will change 100%. This will change, and the stock RSI will change its direction from bulls to bears. And now you can clearly see that the K is less than the D. K is less than the D. This means that the stock RSI on the weekly chart is also bearish. Now if you remember the theory, okay, that I have told you many times, whenever the MACD and the stock RSI are suggesting a particular direction, whenever both are saying that market, means technically the market is in a particular direction, then most likely or most probably market is going to follow that particular direction. As of now, both MACD and the stock RSI are now suggesting the bear trend, clearly the bear trend, okay, bearish market. This means the market is expected to come down further, okay, and I will tell you that how it will break this, the 200 week moving average, and how it will come down, okay. But first let's complete the technical analysis. Then comes the divergence on the weekly chart. So if you see that divergence is now increasing in favor of bears, okay, but still it is under control. When the divergence comes around 25, 24, 27, then only we will say, okay, now the divergence has increased a lot. Okay, this means that the market will rebound. Okay, but as of now, divergence is in control. This divergence means the divergence in the closing prices of the candles. Okay, this is this particular divergence. So this is as of now normal and is supporting the bear trend. Now, if we look into the volatility, okay, so volatility was 191.40 for the week of May 23rd. And now for the week of June 13th, the volatility is 196.31. This means that every other week S&P 500 is building or S&P 500 is making all-time high levels of volatility in its 100 years of history. Okay, and in the previous week, see, I'm talking about the weekly chart. Okay, volatility on the weekly chart. So in the previous week it was 196.31. This is the all-time high level of volatility of the S&P 500 index in last 100 years since the inception of S&P or the S&P 500 index. So the market is heavily volatile. This means that through all of the technical indicators on the weekly chart, it is clear that the market is heavily volatile and market is absolute bearish. Now let's move on to the daily chart to see how the market is exactly going to behave on, like Tuesday, Wednesday, Thursday and Friday. Okay, so we will deduce the probable movement of the market on the daily chart. And there is one more thing that as you have seen, the accuracy of the technical analysis. So if you have not subscribed to this channel, then make sure you subscribe the channel and click on the bell notification icon. And also if you like the technical analysis, then press the like button. Guys, this is the daily chart. Daily chart means one candle represents one day. So let me write it down. This is the daily chart. So before I do the technical analysis on this, the daily chart, okay, let me show you the support and resistance levels. Now there are some very important support and resistance levels, so that I'm going to write down, and all other support and resistance levels, okay, you can clearly see here, okay, at the right hand side you can see, okay, these all are going to act as the support and resistance levels for the market, okay. And the important one, I'm going to write it down, okay, on this chart. As of now, I am not expecting the market to move into 40xx because the market is already trading at 3674. Closing price was 3674. Okay, so the upper resistance level will be 4035 or 4033. This is 4035. Okay, so 4035 is now going to act as very strong resistance for the market, and if for some reason, even if the market moves up, then also market will not be able to breach 4035 in near term. Okay, then comes the immediate resistance, okay, at 3840 or 3845. So this is 3840, and this is what you can see here, that on June 15th, okay, when the market was moving up, it found 3840 the resistance, and then it came down. Okay, and also on June 13th, because the open of the market was less than 3840, that was the reason that open was the high and the market came down heavily. Now comes the very heavy support and very strong support. Okay, again, as I mentioned earlier, okay, this is going to act as 3630. 3630 is going to act as very strong support for the market. Okay, but this does not mean that the market will not be able to breach 3630. Okay, market is already bearish and we are already in the recession. Okay, this is the recession, and this is what I'm telling you since the January 2022. Since I guess, okay, this was the first week of January 2022 when I told you that year 2022 is going to act or is going to be the year of recession. Markets will collapse worldwide, everything will come down, and S&P 500 will come down a minimum of 20 to 25%, okay, in that year of 2022. So you can watch that the technical analysis for the first or the second week of January 2022, okay, it is clearly mentioned there. Anyways, after 3630, okay, then comes another support, okay, at this is around 3498, means 3500. This is 3500, and again I repeat that do not forget about these other support and resistance levels, okay, that are mentioned here at the right hand side. After 3500, okay, then comes another support at 3392, but 3392, okay, market is not expected to hit 3392, rather 3415. 3415 is going to act as a very strong, very strong support for the market. So whenever the market comes down, whenever it is trading around 3415, okay, market is expected to see a rebound. Okay, so there are very less chances that the market will hit 3392 or 3393, but the market will hit 3415, and then, okay, market may see a rebound. Other than that, 3415, we have 3445. Okay, 3445. So you can say that from 3415 to 3445, it will provide a very strong support zone for the market. And I repeat that, see, whenever I say the support and the resistance levels, okay, so support and resistance is not a particular price, okay, it is basically a zone. Support and resistance is always a zone, it is not a particular price. Okay, and this is why and this is the reason why I say that, for example, if I'm saying 3840, then always plus minus 10, plus minus 5, or plus minus 10. Okay, that will create the range, the support or the resistance range, okay, for this particular price. So this is how you should look into it. Now also, do not think that the market will never be able to breach the 3415 or 3392. Okay, market will certainly be able to breach 3392. Okay, and the market is expected to enter into 29xx, okay, in this year. So looking into the geopolitical situation and the stagflation, okay, stagflation and other parameters, okay, worldwide, in the worldwide economy, it is clear that market is not going to rebound, okay, in the short term. Rather, market. So you need to know that how the bear market works. Bear market works like that: the market will come down, then it will see a rebound, okay, it will form a lower high, then it will come down, then it will see a rebound, a lower high, then it will come down, and this is how the bear market works. And in the opposite manner, okay, that will be how a bullish market works. This means that whenever the market comes down, okay, it will come down to the range of 3415 to 3445, and there is a reason that why the market will rebound from this particular zone of 3415. The reason is that many of the retail traders will think that because the market has already came down to the previous high of like December 2019 or February 2020, when the S&P 500 index, okay, was trading at all-time high, because the S&P 500 index has came down to that particular level, this means that the market is going to rebound. Okay, and certainly there will be a short-term rebound. The reason is that the market manipulators, I repeat, the market manipulators will support the retail traders, and they will create some kind of the illusion in the market that, see, because the market has touched the previous high levels, the market is going to rebound and it is the time to buy. Okay, and that is the time exactly when you must not buy. Means when the retail traders will be involved in buying, okay, that will create an excellent opportunity for the market manipulators to sell heavily and to bring it down to 3000 or 29xx levels. Okay, so I will do outlook for the 2022, okay, and 2023 for the S&P 500 index. Okay, so make sure that you have subscribed the channel and click on the bell notification icon. Now, okay, so this is how these support and resistance levels are going to work, okay, in the near term. But because we are doing the technical analysis for the immediate week, okay, so this means that whenever the market comes down, the market will find support at 3415, and I'm not expecting the market to breach 3415 in the coming week, okay, but I will give you the mid-week updates, because if I see that there is something unexpected happening in the market, so I will, on that particular day, okay, before the unexpected thing happen, I will give you the midweek update. Okay, and as you have seen that the accuracy of midweek update is like 92-93%, okay, 92% to 93%. So it will certainly help you to avoid making mistakes. So stay tuned. Okay, now let's first do the technical analysis on the daily chart of S&P 500 index. First comes the Bollinger Bands. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Market has closed between the lower band and the median of the Bollinger Band. This means that the market is bearish. Now comes the moving averages. As you can clearly see that there is a clear fan out in the moving averages. This means that the market is bearish. Secondly, because the market is closing below the moving averages, this means that through the fan out and through the closing, market is absolute bearish through the moving averages. Then comes the Ichimoku. As you can clearly see that for last many days, for last many weeks, okay, market is clearly trading below the Ichimoku cloud. This means that the market is bearish through the Ichimoku. Now comes the MACD. MACD is moving average convergence divergence. Clearly the convergence is not happening, only the divergence is happening. And as you have seen that the divergence on the weekly chart is in control. This means that market has potential to come down further because the divergence is controlled through the MACD on the weekly chart. But on the daily chart, the divergence is almost similar or almost equal to the usual divergence that we have seen earlier. Okay, this means that market may see an immediate retrace, a very short term retrace, like an intraday retrace or a retrace or a rebound for just like 1 or 2 days. That's it, not more than that. Okay, and so that will help the market to reduce the divergence in the MACD. Okay, and when the divergence will reduce, then after 1 day or after 2 days or maybe after 3 days, the market will further come down heavily. Okay, and then the divergence will be normal, or the divergence will be considered normal. This means that when the market comes down and it hits 3500 or 3450, that time the MACD, the divergence through the MACD will be considered normal. So we will look into this when we will deduce the probable movement of the market, but as of now we are talking about the technical indicators. But as of now there is a divergence, and because the MACD is less than the signal, the market is bearish. Then comes the Stoxx RSI. The K channel and the D channel are almost equal. K is just a bit more than D, but they are almost equal. Both are less than 50, both are less than 10. This means that the Stoxx RSI is bearish. Okay. Then comes the divergence indicator. So if you see that the divergence, okay, the divergence on the daily chart in the closing prices of the candles is increasing, and as of now it is 34.66. So when it comes around 24, 25, 27, okay, then only we will say, okay, that now is the time that now the market will see a rebound to form a lower high. Then comes the volatility. If you look into the volatility on Friday, that was the weekly expiry, the volatility was 99.55, and the day before the weekly expiry on 16th of June, the volatility was 101.76. Still the volatility is trading almost at the all-time high levels for the SP 500 index. Okay, this is the all-time high level that we have not seen in last 100 years since the inception of the SP 500. So we can clearly see that on the weekly chart and also on the daily chart, the volatility is almost trading either the volatility is either forming an all-time high or is trading, okay, almost around the all-time high. This means that the market is heavily volatile. Now this means that through all of the technical indicators, market is bearish. Market is clearly bearish through all of the technical indicators. Guys, there is a little change in the technical analysis from this week onwards. Earlier we used to do the technical analysis on the weekly and the daily chart. That's it. Okay, but from this week onwards we will also look into the European and the Asian markets and also in the Dow Jones, okay, just to increase the accuracy of the weekly technical analysis. Now let's see what is happening in the Dow, in the European market and in the Asian market, and then we will get back to this particular chart and then we will deduce the probable movement of the market. Guys, this is the Dow Jones. This is the Dow chart. Okay, Dow Jones Industrial Average Index. The movement of the Dow is almost similar to that of the S&P 500. Okay, and the technicals are almost saying the same thing. Okay, as of the S&P 500, the only change here, okay, that I can see is that the divergence is increasing in the MACD of the Dow more than what we have seen in the S&P 500 index. Okay, so this is the only change. Other than that, let's see if the same thing is happening, okay, through the 200-week moving averages. So if you see that the 200-week moving average, the Dow was able to breach the 200-week moving average, but But as I've mentioned, okay, in each and every technical analysis many times, okay, again and again, that we do not care where the market is heading to or what the market is doing, okay, within a day or within a week. We always look into the closing of the market, the closing. So the closing prices are very, very important. If you see that the closing of the candle was above the 200 weeks EMA, 200 week EMA, or the 200 week moving average. So this is very, very significant. This means that even though the market is bearish, this means that in the short term, like for a day or for 2 to 3 days, okay, market is expected to see a rebound. Now this rebound will work only and only if, or most likely this rebound will work if the open of the market, I repeat, the open of the market is above the 200 week moving average of the Dow and of the S&P 500 index on the weekly chart. Remember, weekly chart, 200 week moving average. Okay, open. I'm talking about the open. Okay. Now let's see what is happening in the European market. This is the Euro Stoxx 50 index. Euro Stoxx 50 index. Okay, SX5E. So Euro Stoxx 50 index, if you see that movement is almost similar to that of the Dow and the S&P 500. Technicals are almost same. Okay, and divergence is in control. Okay, stock RSI is normal, and the divergence and the volatility. Okay, yes, there is one interesting thing here, that the volatility on the daily chart of the European markets, okay, it is not at the all-time high levels, rather the volatility is in control. Okay, so the all-time high levels were seen in the month of March, okay, when there was the war between war between the Ukraine and the Russia, and there were some other tensions. Okay, so there was this thing on the volatility was around 135 or 130 on 16th of March, okay, or around 16th of March. Okay, but now the volatility is only 75. So the market is volatile, but not as much as we are seeing in the S&P 500 and the Dow Jones. Okay, so volatility is very stable as compared to the S&P 500 and the Dow. So let's see what is happening on the weekly chart of the SX5E. Now this is the weekly chart of the SX5E. Okay, the Euro Stoxx 50 index. If you see that in the week of February 28th, the SX5E has already breached the 200 week moving average, but in the subsequent week the SX5E was able to close above the 200 week moving average, and then in the subsequent week of 14 March, okay, SX5E was able to rebound heavily. Okay, so that was in the month of March. Then came the May. Again in the month of May, okay, it breached, then it closed, then it breached, then it again closed. Now it has breached and breached. So now this is the first time, okay, in the SX5E that it has closed below the 200 week moving average two times, consecutively two times. Okay, so earlier you have seen breached, closed, means the SX5E failed to close two consecutive times below the 200 week moving average. This clearly confirms that we are in the recession, we are in the bear market. See, if you have subscribed to the channel, and if you are watching my previous technical analysis, then I have repeatedly mentioned that you must look into the two consecutive closings, and if you see that two consecutive closings are above or below at a particular support or resistance level, okay, or the moving average, then only it will confirm the particular trend in the market. Now this also means that, see, the European markets are bearish, okay, and also the Europe is also into the recession, okay, and the American markets, or you can say that globally, okay, we are into the recession, as I have mentioned in the first or second week of January 2022. Okay, so we are in the recession. Now this recession is going to be worse, okay, in the third and the fourth quarter of this year. Now let's see what is happening in the Asian markets. For the Asian markets, okay, I'm going to look into the HSI, the Hang Seng Index. HSI, the Hang Seng Index. Many of you might be looking into the Nikkei, okay, the Japanese, the Nikkei index, okay. So if you look into the movement of the Hang Seng Index, then this movement is not in line with the European markets and the American markets. This movement is different, okay. But now what surprises here is that on June 17th, see, on June 16th, the Hang Seng Index, okay, so it gave a very heavy bear candle, and this was because of the Fed's update of 75 basis points, okay, BPS, the rate hike of 75 BPS. But on June 17, the Hang Seng Index was able to close above the Ichimoku cloud in the bullish zone of the Ichimoku. This means that the South Asian, the China and the South Asian, okay, markets are going to retrace or are going to see a short-term rebound, because we are seeing that the S&P 500 and Dow and the European markets are coming down. So the fall in the market, it will not be as sharp as we were anticipating, because the Asian markets are going to give a little bit of support in the particular fall of the market. So for example, earlier, if the S&P 500 was expected to fall by 2%, now because the support from the Asian market, the S&P 5 will fall like just 1%, maybe 1.2%, maybe 1.3, maybe 0.8% or so. Okay, so it will give just a little comfort to the American and the European markets. But there is one more thing, that the Hang Seng Index is extremely volatile index. It is extremely volatile index. So looking into just 2 or 3 candles, okay, or just for a week, we cannot say that the Hang Seng Index is going to be bullish. We also look into the weekly chart of the Hang Seng Index. This is the weekly chart. Now the picture is more clear on the weekly chart. Okay, more clear as in, if you see that on the daily chart, okay, the Hang Seng Index, it was bullish because there was one candle that has closed above the Ichimoku cloud. But on the weekly chart, it is confirmed that because the Hang Seng Index is already trading below the Ichimoku cloud, that means the Hang Seng Index is also bearish. And if you see in the technicals of the Hang Seng Index, that the Hang Seng Index was it was failed to breach or failed to close above all of these moving averages 2 consecutive candles. I repeat, 2 consecutive candles. So there were no 2 consecutive candles seen, okay, from last year, like August, I guess, July 2021 or August 2021. It was continuously, it was coming down, okay, and now again, because it has closed below the moving averages in the week of 13th of June, now it is expected to come down further. See, whenever the Hang Seng Index will move up and the American and the European markets will come down, Hang Seng Index will give some kind of comfort, will give some kind of support to the European and the American market. But when the Hang Seng Index is also coming down and the European and American markets are also coming down, in that case, it won't be able to provide any support to the European and American markets, and European and American markets will fall, okay, by the percentage that they are expected to fall. Now let's get back to our S&P 500 index. This is the S&P 500 index. Okay, now let's deduce the probable movement of the market, like how the S&P 500 is going to behave on Tuesday, Wednesday, Thursday and Friday. First of all, because both the S&P 500 and the Dow Jones were able to close above the 200-week moving average on the weekly chart, this means that market is going to find a short-term comfort. Okay, this also means that if the open of the market on Tuesday, that is June 21st, if the open of the market is above the 200-week moving average, remember 200-week moving average, in that case, okay, market will come down again to retest the 200-week moving average, okay, and again it is expected to not to break or not to close below the 200-week moving average, and then it will see a rebound. Now whenever the market see a rebound, particularly on Tuesday, okay, in that case initially it will find a resistance at 3, this particular price is 3675. After crossing 3675, then we have our strong resistance at 3710, okay, the zone of 3710. Then comes the next resistance level at 3735, okay, this particular resistance. Thereafter comes the next resistance at 3791 or 3790, and then intraday, okay, market will again come down, okay, market may again retest, I say retest, okay, the 200-week moving average, the 200-week EMA. Now if in the second time, if the market is able to breach the 200-week moving average, okay, in the end the market is also able to breach the 3630, okay, or the zone of 3630, in that case the market will fall, the market will come down, okay, market will not see a rebound. In that case what will happen, you will see, or you might see a candle like this with a long wick. This long wick will represent that that market initially saw a rebound and then it came down. Now there is one more thing, that this is what I've told you earlier, that if the open of the market is below the 200-week moving average on Tuesday, on 21st of June, in that case, okay, most likely the open will be the high and the market will come down. No rebound, no bounce back, no retrace, nothing. The only rebound that will be seen, okay, if there is a very heavy gap down open, in that case market may rebound to retest to hit the 200-week moving average, and then it will come down. That will be the only thing, okay. So you need to be careful, you need to look into the open of the market on Tuesday, okay, whether the open of the market is above the 200-week moving average or below the 200-week moving average, okay. And again I repeat, if you are bullish, then make sure you are using a very tight stop loss. If you are bearish, then you can give it some room. Now other than that, okay, if you see that that somehow the market is able to survive on Tuesday, and market means the open of the open of the market was above 200-week moving average, market moved up, came down, moved up, okay, and but finally the market closed above the 200-week moving average. In that case what will happen, the market is expected to see another day, a short-term bull day on Wednesday, okay, means on Wednesday also the market will move up, okay, but again the upward movement, the retrace of the market will be initially limited to this particular zone of 3710 to 3735, okay, and when the market breaches this zone, then it will move up to hit 3790, and then we have our 3840, because see, on Monday also this moving average will come down to hit the 3840, and even if the market try to give a very heavy rebound, then also it will find 3840, then it will hit the moving average, okay. So it will simply create a very heavy resistance for the market, and also it will give you an opportunity, because in that case the market will form a lower high. And as I mentioned, because we are already in the bear market, okay, everything is coming down. Whenever you see a lower high, so lower high will be an opportunity for you to sell or to buy put options. So this will be there on Wednesday, okay, provided that the market is able to close above the 200-week moving average. Secondly, market is expected to retest the 200 weeks moving average, okay, in the coming days or in the coming weeks, and market will certainly be able to breach the 200-week moving average, because market has to come down to around 3000 or 29xx levels, okay. So initially the market may show you the rebound, and means the retail traders, okay. So retail traders will think that because now the market is moving up, so time to buy, but It is not. And the reason is that we are in very early stages of the recession. Okay, so the recession is there. Now if I say that recession, okay, on a scale of 0 to 10, okay, so 0 is the very early and 10 is the final. So as of now we are, okay, around 3 to 4, okay, 3 to 4, this the level of recession, okay, means still there is 7 to 8, or sorry, 6 to 7 to go. So we are in the recession, okay, but the recession does not mean that you are not going to make money. You can make a lot of money, because see, the only thing that you need to learn, or that you need to look into, is the direction of the market, how the market is going to behave, where the market is heading to. Then you know what to do. You can buy or sell accordingly, and you can make a lot of money. There are a lot of people out there who make a lot of money, particularly in the time of recession. So we were talking about the Tuesday and the Wednesday. So after the Tuesday and after the Wednesday, okay, if there is a lower high, then it will give you an opportunity. To sell. Then comes the Thursday, okay, and the Friday. So the Thursday, okay, as of now, I'm not expecting a very heavy movement on Thursday, because that heavy movement will be seen either on Tuesday or on Wednesday. Okay, but on Friday, because the Friday will be the weekly expiry, and we are already in the recession, we are already in the bear market, and also because on the monthly expiry on June 17th, okay, market did not give a very heavy candle. So in the coming week on Friday, so Friday will be what? So the Friday will be 24th of June. Okay, so on the 24th of June, this week, okay, means this weekly expiry, market is expected to give you a heavy movement, okay, in this the weekly expiry. So I will give you the midweek update, okay. So as of now I am expecting this to happen, okay, like on Tuesday, Wednesday. But again, so this is one thing. Now the second thing is that in the other scenario, when the open of the market is below the 200 week moving average on Tuesday, and the market comes down, then definitely the market will be coming down towards 3500. 3500 will provide a support for the market. Okay, market will come down, then the market will rebound, and this time the rebound, okay, market will again retest. So market will retest, whether it's coming down, whether it is moving up. If it is above the 200 week moving average, then it will come down to hit the 200 week moving average. If it is below the 200 week moving average, then it will rebound to hit the 200 week moving average. The market will again and again retest the 200 week moving average until and unless it clears the 200 week moving average, the zone of 200 week moving average. And the zone of the 200 week moving average is from 3630 to 3500. Secondly, there must be two consecutive weekly closings below the 200 week moving average. Then only it will clear the 200 week moving average. In that case, it will not rebound to retest the 200 week moving average, rather it will continue to fall and fall. And then do not forget that we have intermediate support levels, okay, and once it breaches the 3500, then it will come towards the 3415. Now this is what I told you, it is going to act as very strong support for the market, and also I gave you the reason. But if something comes up, okay, means if something extraordinary happens in the market, then I will give you the midweek updates, and through the midweek updates, okay, you know how to trade, and you can avoid making mistakes. Guys, hit like if you have liked the technical analysis, and also do not forget to subscribe the channel, because I will be giving you the midweek updates. So make sure that you subscribe the channel and do not miss the midweek updates, and also click on the bell notification icon, because if you subscribe the channel and you do not click on the bell notification icon, in that case, whenever I upload the midweek update or the weekly technical analysis, you will not get the notification. So make sure when you subscribe the channel, you also click on the bell notification icon, so that you can be notified immediately when I upload the midweek update and the weekly technical analysis. So guys, this was the weekly technical analysis for the week of June 21st, 2022 for the SP 500 index.